In the previous lessons, I already showed you what multi-timeframe analysis is. We started with the basics of run on a higher time frame as a trend on a lower time frame, and then we continued into a little bit more advanced concepts such as a lower time frame confirms the higher time frame and how that happens by looking at various examples and looking at the monthly, weekly, daily, and even the 4 hour and the 1 hour to see how it all confirms each other. Right now, we're going to take it up a notch and start talking about deceleration consolidation using multi-timeframe analysis. So in the previous lessons, we already covered deceleration and we also talked about consolidation, and we know what the differences are, right? Deceleration is just when price action is slowing down. After accelerating, it needs to slow down at some kind of support or resistance levels. Consolidation is when it continues to move sideways at that support and resistance level for an extended period of time, such as a week, 2 weeks, maybe a few months, depending on which time frame again you're looking at. So we know what the basics are when it comes to deceleration and consolidation, but how does that look like when we start to apply multi-timeframe analysis? What does deceleration actually look like on a lower time frame? What is it supposed to look like? What about consolidation, right? How can we make sure that when price action is consolidating on a daily chart, that we're actually getting into the positions when the consolidation finishes? So how do we know when the consolidation comes to an end? I'm going to show you all of that right now in this lesson. And it's going to be very, very good. It's going to be interactive, but I have a bunch of examples here that I'm going to walk you through. A couple of examples of deceleration and a couple of examples of consolidation using multi-timeframe analysis. So let's have a look. First example that we're going to look at is we're going to start off with deceleration, right? So let's do some multi-timeframe analysis first. Right here, when we're looking at this monthly time frame, we obviously had support at this general level and we had this descending triangle, right? So we have a descending triangle, we have support, and we have this trend line connecting the lower highs. And then price action got squeezed to the downside out of that descending triangle. So this is a perfect example of what a descending triangle again looks like. And we had a breakout to the downside right here, right? So now potentially this might continue going lower. So let's go back farther. Does the weekly chart confirm this bearish bias? Can we take this farther down to the next support level, such as this one right here? So when we look at the weekly chart, and let's blow it up a little bit. So again, we have the same horizontal support and resistance level. And you can see that this is when the monthly chart broke down, right? This is what the weekly chart looked like. And then the weekly chart had a pullback. So on the monthly chart, we'd never had this pullback if you have a look. Right? On the monthly chart, we just had one bullish candle. It was 1 month, that's it, But on a weekly time frame, we have much more data here because again, we're stepping down a couple time frames, right? So from the monthly to the weekly, every single month, there's 4 weekly candles, right? So we have a little bit more data here. So instead of just a bullish candle, we actually have a pullback on the weekly chart to reject what was once support became resistance. And you can see right here, it's already starting to decelerate, right? It's slowing down at the support and resistance level. And then right here, we have this bearish engulfing right there before the massive drop to the downside. So what does that look like on a lower time frame? So take it down to the daily chart. The daily chart should now give us a little bit more price action, right? Because this is not consolidation. This is literally slowing down and rejecting the 20 EMA and this horizontal support and resistance with a bearish engulfing. And then on a daily chart, during that exact period in time, as that weekly chart broke down, as the monthly chart broke down, that was right here. So now we have even more data. This is what we call a rising wedge, right? So we have this horizontal support and resistance level. It's now more of an area in this case. And then price action started to give us these higher high and higher low and higher high, but you can see that it's being squeezed within this rising wedge, right? So that's a rising wedge price action pattern. And this right here, this pattern now was broken to the downside. So does the daily chart confirm the deceleration that we had here on a weekly chart? It does. Does the daily chart confirm the rejection that we had here on a weekly chart? It does. The bearish engulfing on a weekly chart was confirmed by this breakdown of this rising wedge price action pattern on the daily chart, right? But let's take it even a step farther, because if you look at this, you can notice that the daily chart is also slowing down, right? was popping to the upside, and then all of a sudden we started to receive candlestick formations, a doji, a high test, this massive bearish candle giving us this breakdown. Now, what did the lower time frames actually give us during this period of time? A run on a higher time frame, right? So we believe that a run is developing because of all these higher time frames. The monthly chart broke down previously, right? And chances are we're going to continue lower. The weekly chart had this break and retest with bearish engulfing. So we believe something's happening here, and it did. And same thing on a daily chart. We had this price action pattern, right? And deceleration, high test reversal, bearish candle breaking down. So again, a run is beginning on a higher time frame. A run is beginning on a daily chart. So we should have a little bit more confirmation on the lower time frame. So during that period in time, when you look at this 1 hour chart as an example, here is the trend line. This is where all that price action was happening. And as we had that bearish engulfing or that bearish breakdown on the daily time frame, this is where the high test developed. Price popped to the upside and it fell, giving us a high test reversal. Okay, and it continued to fall to give us a lower low. Previous low, lower low, trend change, right? Continued further and then pulled back to give us a lower high, confirmed trend change. And this is a great time to enter, right, on this lower high. And then since that lower high, check it out. At that point, we had full confirmation. We had confirmation when we broke down, right? And then we had this clean pullback to the 50 EMA, and then we just continued with the bearish trend, and then all of a sudden dropped massively to the downside. So this is deceleration on a higher time frame and what it's supposed to look like on a lower time frame. It's again, when we have that deceleration on a higher time frame, the lower time frame should just give us a simple trend change. That's it, right? Whenever we have deceleration, doesn't matter whether it's decelerating on the monthly chart, right? We should start seeing some kind of price action, some kind of trend change developing on a lower time frame, such as the daily and even the weekly, right? If we have deceleration on a daily time frame, if the daily chart is slowing down, we should start seeing some kind of trend change on a lower time frame, such as the 1 hour chart, like we did in this case, right? The daily chart was giving us that high test with that bearish breakdown, right? And then the 1 hour chart fully broke down, giving us a lower low and a lower high. Trend change, time to enter the trade. Another example of that, of deceleration, would be right here. I'm going to go a little bit quicker now. And this is live, so you can see that this is decelerating right now at this support level. And we already had a look at this example earlier, but you can see again, really good support, and price action is decelerating right here, right? Beautiful deceleration, inverted hammer, low test, and now we're slowing down. We don't know how this candle will close yet. We still have a few hours left in a day, but we should start developing some kind of bullish price action to confirm that this is actually decelerating. So on a lower time frame, we should have some kind of a bullish trend developing. And you can see clearly that on this 1 hour chart, we have an inverse head and shoulder pattern. Left shoulder, head, right shoulder, higher low, higher high, trend confirmed, right? So that deceleration that's happening on a daily chart is already confirmed by a trend change or bullish price action on this 1 hour time frame. Simple, right? Another example. So in this last example of deceleration, when we look at this monthly time frame, we're starting to notice that the monthly chart again popped to the upside, higher high, previous highs, higher high, and then it had this pullback to 0.618 Fibonacci retracer. And you can see that it's obviously slowing down, right? We have a double doji before this bullish engulfing. So we have a double doji. During this period in time, you can see that the weekly chart is within this falling wedge price action pattern. It's kind of choppy though, right? It's consolidating, it's choppy, it's not very clear price action. But again, just before this pop to the upside, we had this tweezer bottom, bullish low test and another low test, right? That is when we had the doji on a monthly chart. So on the weekly chart, we have a little bit more price action, or at least candlestick formation. We have bullish candlestick formation, which is this tweezer bottom reversal pattern. Well, now on the daily chart, we should have more confirmation, and on a daily chart we have a full-on pattern, which is this falling or descending triangle in this case. So descending triangle, price action stalling at the previous lows, and then boom, doji pop to the upside, right? So this is again confirming the deceleration. There's a little bit more happening on every single time frame. The daily chart slowing down with a double doji. The weekly chart has this big falling wedge with a tweezer bottom. And then the daily chart has a smaller descending triangle with this support level, a doji, and a bullish engulfing, right, just before this breakout. Now, if we go even farther, what we believe is this new run is happening because of the monthly and the weekly and the daily. On the lower time frame, we should have a little bit more price action. So on the lower time frame, the 4-hour chart was obviously just giving us some bullish candlestick formations and some consolidation, not much. But if you look at the 1-hour time frame, right away, as we hit those lows, we had a breakout, higher low, or a higher high, higher low, and we continued with higher highs and higher lows. So we had this trend change that developed right here. So that is, again, deceleration being confirmed on every single time frame by giving us a little bit more every single time, right? Deceleration on a monthly should give us a little bit more on a weekly. On a weekly, deceleration on a weekly should give us a little bit more on the daily. And deceleration on the daily should give us a little bit more on a lower time frame, such as the 1-hour chart. In this case, we had a trend change. So that is it for deceleration. Right now, I'll show you consolidation, because deceleration is simple. When something is slowing down at support, look for some kind of bullish price action, whether it's a pattern, candlestick formation, a full trend change, right? When we're decelerating on a higher time frame, we should have a little bit more on a lower time frame. Candlestick, pattern, trend change, right? Any one of those. Consolidation is different. So if we come back to the charts here, here's an example of consolidation. You can see that on this daily chart, we'll just focus simply on the daily time frame. You can see that on the daily chart, we have a lot of consolidation as we're holding this daily 50 MA. Obviously, we're holding the daily 50. Something's happening here. The daily 50 is holding resistance. By why do we have so much consolidation? That's what you always have to ask yourself. Why is price consolidating? Why are we not breaking down or breaking to the upside? Why are we just moving sideways? What is happening? So simply by looking at this daily chart, we can't answer that. All we can see is that price is moving sideways, and it's been moving sideways for a few weeks here, right? That is where we need to now jump down to the lower time frame and find out why is it consolidating. So if you look at this 4-hour chart, it's consolidating because, again, price action started holding that 4-hour 50, and then eventually was just holding this trend line, right, and moving sideways, forming as an ascending triangle, right? Higher highs, or sorry, higher lows with resistance. So price action was just being squeezed within this triangle. That is why it was consolidating. The daily chart was consolidating simply because the lower time frame was within a triangle pattern. So when does consolidation finish? When the triangle is broken, either to the upside or to the downside. In this case, to the downside, right? So let's have a look at the 1-hour chart in this case. Right, the daily chart is consolidating. Why is it consolidating? Because the lower time frames are within a price action pattern. They're within a triangle, right? So when do we have full confirmation that consolidation actually came to an end? So if we look at this daily chart, right, we can see that it was consolidating for quite some time, and then all of a sudden started to break down here roughly right there, July 24th. And if we look at the 1-hour chart during that period in time, you can see that right here, we finally, on July 23rd, right, a day earlier, on July 23rd, we broke out of that triangle pattern. Guess what? On July 23rd, we were out of consolidation, right? Because the only reason, literally, the only reason why we were consolidating is because there was support and resistance on a lower time frame, which gave us this triangle pattern with a trend line and horizontal resistance. And once that triangle pattern was broken, no more consolidation, right? Consolidation comes to an end. And in this case, we had a breakdown, pull back, lower high, and then it started to fall. It all happened on the 23rd, and then on the 24th, it already started this bearish trend on the 1-hour chart, right? Which started this big drop on the daily chart. And we knew that it was happening. We knew that consolidation came to an end before this drop even happened, simply because on the 23rd, on the lower time frames, we had a breakdown and a retest. We had a lower low and a lower high. And on a 4-hour chart, same thing. On that day, on the 23rd, check it out, we had this big bearish breakdown. right? So that is now confirmed. To me, that tells me that consolidation has simply came to an end because of this breakdown out of this triangle pattern. Now, another example is if we come back to the charts and have a look at right here, we can clearly see that right there, this daily chart is consolidating sideways. I just removed all those support levels just to keep it nice and clean. But you can see that the daily chart is just consolidating. It's just moving sideways. It's not doing anything. During that period in time, the weekly chart gave us a tweezer bottom, right? A doji, a low test, and another low test right there. Let's make it larger, right? But the daily chart was just moving sideways. It was just consolidating. So how can we get into this position without still being stuck within consolidation? Because sometimes you might jump into, without waiting for confirmation, you might jump into the position too early and it might still continue consolidating for the next few days, right? So when price action is consolidating, there might be some good setups there, but we want to make sure that we're actually getting in when that consolidation has come to an end. And the only reason to know when that consolidation comes to an end is when the lower time frame, whether it's consolidating on a monthly, the daily chart should have some kind of a breakout. If it's consolidating on the daily, like in this case, the lower time frame, the 1 hour chart or the 4 hour chart should have some kind of a breakout. But why is it consolidating, first of all, right? So let's have a look at the lower time frame, because it's consolidating on a daily. Weekly is good, daily is in consolidation. Why? Check out the 4 hour chart. We're simply consolidating because we're holding this trend line. That's it, right? That is why the daily chart is consolidating, because the lower time frame is holding this trend line, and price does not want to break this trend line and go farther up until it finally does. And when it broke it right here, guess what? It came back to retest and we exploded to the upside. So right there, when this trend line was broken, that's when we were out of consolidation on August 2nd. This trend line was broken to the upside and we finished consolidation, right? Because the only reason why it was consolidating is because it was holding this trend line, right? So when it finally broke it on July or on August 2nd, we can have a look here on the daily chart. August 2nd was right here. On a daily chart, it was still consolidating. It was still within consolidation, right? But if you drop down lower and actually try to figure out why is this consolidating? What's holding resistance? What's holding support? What's causing the sideways price action, right? When you find those levels, and when those levels are finally broken, guess what? Consolidation is finished. It's over. It's done, right? And it's time to take the trade long or short. And let's see if there's anything else to mention here. Yeah, that's kind of it, simple. The reason why it was consolidating, trend line. Once that trend line was broken, consolidation is over and now it's ready to go. Another example, the last example of consolidation is right here. And again, this happens quite a lot, right? So it happens quite a lot. That's why we need to actually know when to enter these positions. So in this case, again, we had a look at this example a few times. We know that the monthly chart is at support, right? The weekly chart is at support. No trend change though, so we don't have confirmation yet, as we looked at in the previous lessons. But the daily chart is just consolidating. So no bullish price action, but it's just consolidating. Obviously, this is good support, right? So there could be a trade to the upside. But why is the daily chart consolidating? Why is it moving sideways, right? And not going up or not going down? What are the levels? So when we look down to the lower time frames, you can clearly see that on the 4 hour chart, it's just kind of weird. It's just moving sideways. Right, so we can draw in our trend line and we can see that once it breaks this trend line, guess what? Consolidation will come to an end. Same thing on a 1 hour chart, right? We can draw in, we know that it's consolidating, it's been consolidating quite a bit. So once it breaks this trend line and gives us something like this, consolidation came to an end. So when we get this breakout, right now we don't have it. Right now it's still within consolidation, right? So when you have a look at these charts, you'll notice that again, the 1 hour chart and the 4 hour chart is still moving sideways. It's still within that consolidation. Therefore, the daily chart is still consolidating. Consolidation is not over. Consolidation will only finish if we break out higher to give us a trend change, a break of this trend line on the 4 hour and the 1 hour, right? So on the 4 hour chart will look like this. We break out higher and then we pull back. But as soon as we have this breakout, then consolidation has already finished. Same thing on a 1 hour chart. As soon as we have this breakout, it's the same thing, same move on a 1 hour and the 4 hour. As soon as we break this trend line on the 4 hour and the 1 hour, consolidation is now finished. At the same time, obviously we can break lower. So we have support here, right? So we have this little triangle pattern. So if we break down farther down, right, and give us a lower low, then obviously consolidation is now finished and we're continuing farther down. We're not rejecting this level, we're actually continuing farther down. So the intraday charts break the lows, we're going to continue farther down. So that is why it's so important to make sure that when price action is consolidating sideways, we actually find the levels that are holding support and that are holding resistance, the reason for the consolidation, right? And then when one of those levels is actually broken to the upside or to the downside, consolidation is now finished, and now it's time to actually take or look for positions. So that is it for this lesson on deceleration and consolidation using multi-timeframe analysis. You see how important multi-timeframe analysis is now, right? It literally confirms everything. And we're going to continue build on this as we go through the lessons. But right now, you should already have a pretty good understanding of what multi-timeframe analysis is. And you can see that from the first lesson of multi-timeframe analysis, when I mentioned a run on a higher time frame is a trend on a lower time frame, we're just using the same concept, right? We're applying the same concept every single time, right? If we believe a run is happening, we should have a trend change, right? Or if we have a trend change that's developing, some kind of bullish or bearish price actions developing, that's the first sign that, hey, we might have a new run on a higher time frame, or we might develop a reversal on a higher time frame. So in the next lesson, we'll take it even a step farther, and I'll show you what reversal candlesticks look like with multi-timeframe analysis. So what does a low test look like with multi-timeframe analysis? What does a bullish engulfing look like with multi-timeframe analysis? I was gonna take it even a step farther, complete this multi-timeframe analysis picture for us. So that's it for this lesson. Hope you enjoyed it. I'll see you in the next one.